I'm here in Dallas for REITWorld 2011, NAREIT's annual convention. Joining me is Ed Walter, the president and CEO of Host Hotels and Resorts. Ed, lodging REITs saw a recovery in October after what's been somewhat of a difficult 2011. Is that a signal that the fundamentals have finally turned around, and do things look like this momentum may be sustained?
You know, Matt, I'm not certain that it's so much of a signal that things have turned around, but I think what's happened is during the summer, the late summer, when we had so much turbulence in the equity markets and in the financial markets in general, primarily because of what was happening in Europe, but also what was happening with the U.S. Congress, there was a great deal of concern about where the economy was headed. And a lot of that spilled over into lodging because I think everybody knows we're so sensitive to how the overall economy performs. I think, though, if you look at one of the reasons why you're seeing such a strong recovery in the stocks lately, and what I think bodes well for next year, is the fact that there seems to be a reduced risk of recession in the U.S. You're starting to see better overall economic fundamentals from the standpoint that people's assessment of GDP growth for this year and next is increased. And probably for our segment of the business, just as importantly, the fact that the assessment over what's anticipated for business investment has actually been improving, not reducing, which changes a trend we were seeing earlier in the year. All of those things bode well for a recovery in 12.
And Host has been a strategic player on the acquisition front. How is the hotel market for acquisitions in terms of pricing shaping up for the remainder of this year and heading into 2012?
Certainly the first half of 11 was a very strong period for transactions. As you saw the stock prices decline beginning in the end of July and in early August, I think that combined with a period of time when the market slowed a bit. But I think what you've seen since then is that there's some reduction in pricing. Cap rates have gone up a little bit. I suspect that we'll see a slower pace during the second half of the year, in part because REITs are not in as position to as easily restock their capital base as they were before. And slightly more constrained debt markets are limiting the ability of other buyers, other than all cash buyers, to participate in the market. But as we look into 12, I think we see a number of favorable things happening. We think there are going to be some more properties that are going to come to the market because they have debt coming due. Now, while that hasn't been a huge driver in the market this year, I think there's a general sense that that will be a more important factor next year. I also think that as you see the fundamentals improved, as we spoke a minute ago, you're going to start to see both people's expectations in terms of what they can pay for a property, as well as their ability to fund it because of improved equity prices, both contribute to a more active acquisition market.
So that's the U.S. story, which sounds optimistic looking forward. But Host is also a player on the international scene, and obviously there's the own issues when we get outside the U.S. How are your international acquisitions looking for the next year?
Well, certainly the performance that we have seen year to date has been very, very strong. And in fact, the acquisitions we've made outside the U.S. have outperformed what's happened inside the U.S. So we've been very happy with the transactions that we've completed. I think as you look around the world, that it will vary based upon the region. You know, we've seen phenomenal performance in Brazil, and we would expect to continue to see that next year. Our hotel in Melbourne, a Hilton in Melbourne, has been doing quite well, and I would expect to see that continue too. New Zealand has been benefiting from the World Cup this year, and so I suspect that next year will be a slightly slower year just because they won't have the benefit of all the people coming to view the World Cup. And then I think the biggest question is going to be Europe. Now, a big part of the European business is driven by people who are not from Europe. So over 40% of our demand in Europe comes from outside the Europe and Great Britain. So that will moderate some of the weakness that I think we all expect to see in the European economy. But I think in general we would expect stronger performance in Northern Europe. We probably are a little bit more concerned about what happens in Italy and Spain.
Ed, thank you very much for joining us.
Great to be here.
For more from REITWorld 2011, be sure to visit REIT.com.